So where do you think crowdfunding overall, the industry, where do you think the industry's headed? Kind of give me some I know you don't like projections, but you can do that.
No, I don't mind
for the industry.
Statements. I don't mind forward statements. I just don't think specific numbers are good. So I've actually spoken this at a couple events recently. Have some slides out. The parallels to, so if you go back to May 1st of 1975, which was the May Day Act, that's when stock commissions were deregulated. I liken the May 1st, 1975 regulation to very much the Jobs Act. It created a new regulatory environment, right? So if you think about asset crowdfunding as we know it, the Reg A, Reg D, and the Reg CF environment all manifest out of the Jobs Act. Obviously, crowdfunding existed before that, but it was sort of the rewards-based version. In May 1st, right after May 1st of 1975, Charles Schwab started Charles Schwab. And at the same time, Merrill Lynch raised its commissions. So it got deregulated and increased its commissions, and Schwab reduced them. If you go from the late 70s to as late to the late 80s, you saw a plethora of companies, Scottrade, Brown and Company, Ameritrade, E-Trade, Trade Plus, Interactive Brokers, a bunch of different shops popped up offering discounted brokerage, using technology, providing better access to share purchases to investors, including non-accredited investors, right? So a very similar parallel about a plethora of low barriers to entry, a lot of companies started, and then what did you see? You saw consolidation, and then public listings, and then even more consolidation. So now you really have a handful of them. On the other side of the business, John Bogle of the Vanguard Company launched the no-load mutual fund in 1978. No-load mutual funds had already existed, but no one touched them. So they moved to a no-load mutual fund. And if you go back in time and look at the pundits, they'll say that this is going to kill the mutual fund business because you need a front-end loaded vehicle. You need to be able to, it's expensive and hard to buy mutual funds and stocks, and you have to have these fees. And he proved them wrong. And now it's really uncommon to find a front-end loaded mutual fund. And you find it's really uncommon to pay a lot for, if anything, for a stock commission. And those two business models, so the Fidelity and Vanguard models over here and the Schwab and E-Trade models over there have merged. So Schwab does discount brokerage and mutual funds, and Vanguard does discount brokerage and mutual funds, and they've merged and they're very large conglomerates, if you will. I see that same parallel happening in crowdfunding, because real estate crowdfunding, because what we're trying to do is get a direct consumer business model. All of us are trying to do the same thing, right? Have a good linkage with the public and become an alternative real estate brand that a Schwab or a Blackstone or a Vanguard or a CBRE might say, well, that's easier than me trying to do it by scratch. I'll go in and I'll consolidate the space, and now I'll have stocks and bonds and real estate to offer my investors. I think that's where we're headed.